There we are. I think we are in session 4 now. Welcome. It's good to see so many of you here. My name is Simon Campbell. I'm the organizer of this Around the Clock Trader Summit. We're doing 2 days of sort of back-to-back presentations. I'm going to bombard you with all sorts of different speakers with different strategies. But underlying, we've all got the same goal, which is to help you make more money from trading and hopefully find a system or a set of systems that will resonate with you and help you to understand what it is that you need to do to trade better, to make a bit more profit maybe than you're already making, or indeed just to stop losing money, because everywhere we click, we see that 80% of us, or even 90% of us, will not make money trading. But of course, 10 or 15% do. So we're trying to get you into that minority of profitable traders, and that involves doing a little bit of hard work, I'm afraid. This is the message that will come out, is that even though, as Jay said, it can be a child's play, it can be easy when you know what you're doing, most of the traders will say you do need to take on some education, do some hard work. But once you get into the discipline and the routine, it should get easier. Our final speaker today, actually at 5 p.m. UK time, Steve Ward. He's a professional trading psychology coach. You probably heard of Steve. He's written books like this, The Bulletproof Trader. He's well worth listening to, because that is almost the sort of the 10% of the difference between learning to understand the charts and timing your entries and exits. What is it that separates the trader that has the same charts, the same strategies? Yeah, one guy will make money, or lady. In fact, the ladies often do make more money, if we're being absolutely honest. And it's because of that psychology. It's because of us men. We're a bit sort of gung ho, and we get a bit caught up in the whole bravado of trading, and that's sometimes to the detriment of our balance sheet. So anyway, we're moving on. Welcome. Our next speaker, Thiru Nagappan, is our next speaker. He's the founder of Master the Markets, who I've known for many, many years, and he's spoken at many of my shows and webinars and seminars in London. Of course, I had the pleasure of going out for a pizza and a beer with Thiru a couple of months ago in London with my son as well, which was great. So he's also a big fan. Thiru, I can see you in the room. I'm going to bring you in now, and we will be able to start our next session, because I know you're going to be talking about your 3 steps to consistent profits. And that's the key word, isn't it? Consistency in trading. That's really what we're all looking for. And once you can get the consistency, we're in business. Thiru, good morning.
Hey, Simon, morning. How are you?
Okay, we've got a super crowd in the room. Thanks everybody that's still here. If you're just joining, great, you're just in time to catch a great speaker. We can see you on the webcam. Shall we try and do the share screen before we?
Yeah, you can hear me fine, yeah?
We can hear you fine, and I can see
Okay,
you.
that's good.
Great.
So let me just share the screen. It's share screen here, isn't it? And entire screen is better. So screen 2. I think this should do it. Let me just... Can you all see this one? Let me
Great.
just... PowerPoint slide. Everyone can see that?
PowerPoint is there. 3 price tips for consistent performance. Yeah,
Yeah.
just say
And if
this
I
is.
put up the chart, can you see this as well,
I
Simon? If
can
I
see that.
change...
Yep,
Okay.
we can see the FX Pro.
Okay, that's good. That's good.
Great.
Awesome.
Thank you for joining us early. I think everybody's here. I think we'll probably just get going so we can make the most of the time. Busy in the markets at the moment, Drew?
Yeah, I mean, we're off to a really great start. I think, as I was mentioning in the social media post as well, I mean, we're up 3.07%. I'll be sharing those results as well with the viewers here.
I
And
saw that.
also, they are in for a great treat, actually, Simon. I mean, we just got our probability indicator actually finalized, and we released it a little bit last year, and it's been getting really awesome demand. And I'll be showing it over here as well. So yeah, really looking forward to it. Thanks for giving the opportunity.
Oh, of course, the pleasure's ours. I'll hand over to you, Thiru. Let's first of all allow you to explain to everybody how you trade, the different services that you run. I know you have a sort of the live room and some
Mhm.
training, but the way that you trade is the key to it. So I'll hand over to you now, and we'll take some questions as we go.
All right. Yeah. Thanks a lot, Simon. Hello, everyone. Very good morning here. I don't know where you guys are in the world, but over here it's a bit cold. We are all tucked in. I can see where Simon is very nice and sunny. Hopefully, you guys are getting some sun wherever you are. If you are in the UK, then of course, yeah, just wrap up yourself as you are in for a really great treat today in today's presentation, three price tips for consistent performance. We'll show you some live trading as well. So not only just theory, we'll put it into practicals on the charts as well. As a quick disclaimer over here, just purely for financial education purposes. That's just me, just to put a face to the voice. Also, you can see my video as well, I believe. Just a little bit about us very quickly before we go on to today's presentation. That's me over there, hanging out with John Bollinger. Really hung around some really great traders, professional traders. There's Jim Rogers as well, co-founder of Quantum Fund, net worth 300 million. Mark Brown, we invited from the US. We learned a lot. Institutional quant trader. In fact, a lot of our stuff that we learned is from institutional quant traders. Elite Traders Conference that we did. Inspiring thing, Mark's mentor actually started with nothing. We're also the founders of Break the Time and Money Link, Traders Open Day. We have cumulative experience of 38 years. Our team, we have mentored over 20,000 over people. And also we run live trading workshops where we catch the trades live in real time. Okay. You can find out more about us at masterthemarkets.net. Don't want to take up too much time talking about us. Today is all about you guys giving your value. Our mission is to spread the truth of trading. We've been going on since 2010, just a little over 13 years now, all in the mission to help you live a better lifestyle. Today's presentation, what we'll be doing, traders, we'll be showing you the three price action tips to give you a winning edge. This is really powerful, so you will see that very soon, and how to apply them in real market conditions to achieve consistent returns. And finally, we'll show you some live trade examples as well to help you trade with conviction. There will also be good interactive exercises where you can win prizes as well, so pay full attention. Okay, right. Let's carry on the three price action tips. The first price action tip, traders, is every time you enter a trade, okay, every time you enter a trade, point of entry, all right, point of entry, we call it. It is always good to know how much move is left on a probability basis. Okay. Now, how do you quantify that? Now, regardless of whichever strategy that you're doing, am I right to say this is a very important statistics to have anytime you enter? How much move is left on a probability basis? Wherever that you want to enter on the chart, wherever you mark it, wouldn't it be good for you to know how much move is left so that your exits can be precise and you can achieve consistent performance? If you feel that is so, just type that into the chat box. I'm just going to quickly see if I can see the, yeah, I think I can see the chat box, isn't it? Yeah.
Yeah, you need to. Do you have a second screen at all?
Second screen. Yes. Simon,
Well,
how do I pull it out?
if you drag this browser, if you just drag this onto your second screen,
Ah, yeah, got you. I
yeah,
understand.
you'll
I
be able to
understand what you're
still
saying.
see questions, and then but we'll still
Yeah,
share.
no, yeah, no problems.
Okay,
Yes. I think
that's
you
okay. So
can see the trading view chart at the moment,
we're
isn't
we're
it?
back on looking at the trading view chart. That's right.
Okay,
But you
that's
can still
great.
see the questions now on the other.
Okay, that's phenomenal. Thank you so much
Brilliant.
for that one. No problems. Okay, yeah, so I can see that most of you are saying Yes, right? So any time frame that you apply to, you can, it's important to know how much move is left, right? So here we are applying on a 1 hour. It doesn't matter which time frame, isn't it, traders? So for example, let me put on a representative basis. So if I were to put a blue line, which is point of entry, let me just do that very quickly. If I were to do a blue line over here on point of entry here, anywhere you enter on the chart, if you're taking a short, right, you would like to know how much move is left towards the short direction on a probability basis so that you know where to exit and realize your profit or loss and minimize your loss if you want to. In the other sense, traders, if I want to go long on this, for example, on the 1 hour time frame, let's say, wherever I want to enter, the concept is still the same, is it not? So let me just quickly do that so that you guys get the idea, and then we can go on to show you what we have done, which is really good. If I, let's say, want to enter here right now, wherever you enter, you should always know how much move is left. Let's say I want to go long on this. If I know that it's got an 80% probability of getting to 1.2347, then I can easily design a strategy just based on getting out on an 80% probability target, right? So I guess you guys understand and appreciate that this first tip of how much does it move on a probability basis is very, very critical, regardless of what strategy you are doing. Now, this is what we call open equity, okay? Or in other words, open profit. All right. So open equity, the definition of this is point of entry to maximum point reached. Okay. Now, this concepts traders mostly, I mean, the reason why our clients stick with us for 8 to 10 years is that nobody talks about open equity online. Read any books, go anywhere online on the websites. Nobody will teach you this. And this is such a critical thing to know to achieve consistent performance. And this concept was actually established back in the 1960s and 70s, where my mentor actually learned from the guy who actually established this, and then he created many billionaire hedge fund traders. In fact, one of the books that he wrote is no longer in circulation as well. But it was based on all of this open equity. And I'll guide you through as we go through today's presentation. You'll get so immense value that you can even apply into your own strategy if you choose to. So the definition, let's go back to this. The definition of open equity is point of entry to maximum point reached. Why was this concept even developed? Let me tell you a little bit about the origins. The reason was this, and most of you will be able to relate to this, right? So listen to this. Wherever you enter, let's say you entered here, right? What usually happens, traders, is that the trade goes in your favor, okay? Let's say it goes up 50 pips in your favor, and at 100 pounds a pip, that's, let's say now you're up 5,000 pounds, okay, in open profit, which is not realized yet. Yeah, not realized yet. Now, in that open profit, the last thing that any one of us want, right, is nicely going up and everything. The fear kicks in when the bar starts to retrace against you. Is that not right? So you're up 5,000 pounds at the peak of this bar here, which has gone up here, right? Now, when it goes against you, the red bar here, then that is when you start to panic or fear comes about if you don't have the stats next to you. So this 5,000 pounds open profit starts to diminish, and then you start to see that, okay, from where it is right now, I'm only up now 25 pips in open profit. Now you're up 2,500 pounds. Your 5,000 pounds initial open profit came down to 2,500 pounds. Then what happens at this point, traders? Some of you might get very fearful, might think that it might go below my point of entry and go into negative territory. So some of you might exit, realize it, 2,500 pounds. Some of you might wait for a bit longer. And at this point, there's only two um, ways that the trade can go to. You can go below your point of entry and you can maybe come out at a loss of £1,000. Or some of you might wait much more further, price might reverse, and then you exit at £6,000. So you see what then the institutional quant traders did, and here's the most smart part, what they did is that they found out where the account goes to, or the maximum point reached, as I said, most of the time. Okay, most of the time. Let's say if you found out that 80% of your 80% of the time, wherever you enter on a consistent basis, wherever you enter on a consistent basis, 80% of the time it moves in your favor 50 pips before coming down. What would you guys then do? If 80% of the time you found that it goes in your favor 50 pips or 50 points, you earn £5,000 in open profit before it goes against you, what would you do? Wouldn't a wise thing to do be to take out your profit at £5,000, take out half of your position, or do one strategy where it gets to £5,000, just take it out. 80% of the time, you'll be taking out £5,000 or 50 points or 50 pips in profit at £100 a pip, isn't it not? So you see how important this statistics is it not? That's how the origins came about, right? Back from the 1960s and 70s. And then they then formulated a table to find out the 80%, 50%, and 20% open equity to develop 3 different types of strategies. Okay, this will help you target setting. Now, let me go on to the trading view chart over here. Let me show you what we have done. Okay, this is the exciting part, which has created a lot of demand actually that a lot of traders want to get hold of. Now, what we have done is, traders, you can see over here in this smart money indicator, as we call it, what we have done over here, you can see the smart money indicator is a tops and bottoms quantification indicator. To find open equity in a consistent validative manner, 2 points need to be locked in. The first step to getting your point of entry consistent is to quantify your tops and bottoms. So we designed some formulas which was taught to us by institutional quant traders, where the formulas stem back to the 1960s and 70s. So the first step is to quantify your tops and bottoms, which we have done the homework and we have programmed it for you. So over here, the orange arrow over here is the top, and the blue arrow over here is the bottom. Okay, right. So that's one thing. Now, when does this top get confirmed? That's when the dot comes in. So over here is telling you that this bar, okay, this red bar here on the close, it confirmed this top. So at the same time, the dot will come and the arrow will come. Likewise, over here for this bottom, the dot came in and the arrow came in at the same time. And so therefore, this is your confirmation bar that confirms this bottom. Now, that's the first step. So we've quantified the tops and bottoms, okay? Right. The second step is establishing point of entry. So if I were to do a simple thing to validate my stats, which is every time I enter, I'll enter on the close of the confirmation bar. That means every time a bottom is confirmed by this dot, I'll enter on the close where the blue line is, okay? In this case, 1.2224. All right. That's my point of entry. Next thing what I do to get my stats for the 80% distance that it can move, what I then do, traders, is that I take it from the point of entry. Let me just do it on one which has already completed. Then we'll see the predictability future of this, okay? So you see, what we then do is we take the point of entry, which is on the confirmation bar dot, yeah? So from here, so which is the close of this bar, which is 1.2140. From there, I take it to the maximum point reached, which is the bottom here. And over here, you see it's printing for me. That is 299 pips in this example because it's GBP USD, okay, in currencies. We can do this over anything. We can do this over index, stocks, anything you name it. We can do it over the 50, 100,000 instruments on TradingView. Now, so for example, for this move over here, how much has it done from this point of entry here? You see, it's done 192. For this one, it's only done 59. Over here, it's done 439. So by quantifying bottoms and tops, you can only two types of moves now, bottom to top or a top to bottom move. Only two types of moves in the market now. Now, once I've got all these numbers, you see how we got there? We quantified the bottoms and tops. We got our point of entry. We got maximum point reached. And then now we got all the numbers. Then we can collect it into this, what we call the open equity table. Okay. Anybody who has quantified tops and bottoms will be able to derive an open equity table. It's sequential. It's like saying, if you know how to walk, you can run. It's sequential, isn't it? If you don't know how to walk, I mean, there's no chance that you can probably run. So therefore, the same thing here. If you have quantified your bottoms and tops, and whichever type of literature or philosophy of trading that you're following, if they are saying that they can, this is how you find the bottom or top or whatever, you naturally must be able to design an open equity table. To say that you cannot, that means you have not quantified your bottoms and tops. And you will see the relevance of that and why it's important to quantify it so that you can get the open equity tables. Now, here is the most important part. Eventually, you see traders, because of all of this that we have done, you can develop this open equity table. Now, what this open equity table says is that it's collecting all the total swings. That means it's collecting all these dots, all these bottoms and tops, okay, how much they ran. Altogether, that's 406 tops and bottoms. That's the first thing. Over the 10, 12 years that we have designed over here. If I go into settings, you can see over here that it's telling you over all these periods over here, over this 2010 2030, I've got 2030, that's not 2023, that's over 13 years. It's collecting all that data. Okay, so it's telling you there's 406 tops and bottoms on a daily time frame on the GBP/USD. Okay, on the 406 tops and bottoms, it's telling you that 348 of them run more than 25 pips. That means, you see, for example, this move here definitely ran more than 25, right? Because it ran 192. This one also ran more than 25. So it's ticking all of that. For example, the ones that don't run to 25, let me see if I can show you one which doesn't. I think we should be able to find one. Let's see. It's taking a while to move back. This one is 39. Just came almost there. Let me see. There you go. So I've got one here. So you see this one immediately turned. You see this one only did only 9. So this won't be one of the ones that went past the 25 pip distance. Okay. So this is what it's telling you. So 348 of them, or 85% of them, got to 25 pips. 50% of them got to 125, and 20% of them got to 300 and actually 300 pips. You can choose that one. Yeah, 20.69%, 300 pips. Now, what can we do out of that? Remember, first, caution is that this is just stats. This is your open equity stats at the moment I'm going through. How much move is left at any point of entry? Okay. Now, from this stats, you can then design your targets for strategy 1. That's how we were taught by the institutional quant traders. Very, very smart guys. What they said is you design one strategy based on an 80% target or 80% reliability, very small target. So anytime the dot comes, right, traders, I will take a small target towards 25 pips and that's it. I'll exit it. That's just strategy 1. And the good part about this is that I can do this across any instrument. And then, of course, some of you might say, okay, this is all good and the stats looks good as well. But what is this predictability future? For what's this projection power for the future? And then in terms of that, you develop strategies and you see your real-time testing results, which I'll show you later on as well on our live trading room journal. So for example, we had confirmation dot a few days ago that just hit my 25 pips and then came back down. We exited in one day. That's the next stats I'm going to be showing you as well. So hopefully most of you understand, and you can apply this across any instruments here as well. You see the Dow Jones as well? I can apply this over anything, right? And I can find my 80% point over here as well. This 125 points on the Dow Jones, which is about 125 as it is, as we have mentioned over here. Okay, that's the 80% probability number. I can also do it over stocks as well, right? So over here, it's telling me that this is 25 means 25 cents, okay? 0.25, okay? 75% of the time. I can reduce that number to find my 80% probability number. So you can see um, the versatility is quite large and wide. So that's what this whole open equity is all about, traders, okay? Point of entry to maximum point reached. All right, and I can do this across any time frame. So for example, if you look at a trade at the moment over here on the GPUSD, if this confirms at the end of this hour, then I also can find out my 1 hour OE as well if I want to take a trade. But remember, the most important thing is that this is not a buy and sell indicator. This is just a top and bottom quantification. That's all it's doing. From there, you derive the different stats and then you choose whichever dots that you want to trade or however time frame you want to correlate to make your strategy. Okay, so that is open equity. Open equity definition once more is point of entry to maximum point reached. That's what this is all about. Okay. Our Trader Starter Pack series, which you can see over here, I'll give you the link later on as well. That will teach you actually sequentially about the open equity principle as well. Okay. Okay, I've shown you on the OE, on the practical, on the trading view as well. Okay. Any questions, please type in as of now. Does this make sense? If this makes sense, I'll swiftly move on to the second price action tip. This is the first one. Yeah. How much move is left for target setting? Does this make clear for everyone? Open equity, how much move is left upon point of entry, definition being point of entry to maximum point reached. Okay, right. So most of you are saying yes, it does make sense. And some of you, if you got any questions, of course, type it in as well. And then we will move on to the next one. I'll take all the questions later on. So now we move on to price tip number 2. Price tip number 2. Right. How does it move to get there? Okay. How does it move to get there? One of our clients from US, he said, yeah, Thiru, this is very important statistics. And he said, in other words, you can say that how does it dance to get there, right? Now, let me paint another picture for you, all right, traders. Imagine now, as you can see on the chart over here, as I bring it up, over here, let me see if I can, yeah, there you go. You got a trading view here. So over here, as you can see, another way to look at it is take each dot as one runner. Okay, runner 1, this is runner 2, okay, runner 3, and what we are doing is we are measuring the stats of each runner. How far does he run? And then using that to predict for the future using the open equity table. The difference between a run in real life and a run in the market is that a run in real life is horizontal, whereas in the trading world it is vertical. Okay, that's what this is about. Okay, so in the race to the top, so for example, you see traders, if my point of entry were here, then I show you on the chart and I show you the second stats, the second price action tip very shortly. If I were to say this is my point of entry, which is the blue line, and let's say my race to the top, which was the maximum point, is around here, right? In scenario 1, it can just be a clean run, is it not? It just moves up straight, okay? Now, how much did it move against me before getting to the top, which was here? It's basically, in other words, how much did it go below the blue line? In this case, it was just the tail of this green bar, is it not? That's how much it went against me. Okay. In another scenario, it can be this. Let me show you. In another scenario, it can be like this. I'll just guide you on that. So you went up a little bit in your favor. And then after that, it came back down, comes back a little bit more further down, and then after that, then it shoots up. How much did it move against you before racing to the top? Then, of course, the maximum point was here. Is it not, traders? That is the maximum. It went against you before it went to the top. Yeah. So let's apply this in the charts and in real time as well. And then you can see the power of this stats, okay, which is price action tip number 2. So I've got my point of entry over here, right? I got my point of entry over here, which is my blue line here, right? The confirmation bar close. In fact, I think we can even do this, isn't it? On hopefully this thing will do it. Let me see if I can do a replay. Will it allow me? Yeah, I can do that. So there you go. This will be much more better. So I've got a confirmation bar over there. You see, the point of entry starts here, right? And then let's see how much it moves against my blue line. So the next bar, yeah, it moved a little bit against me, isn't it? The low of this bar. Is it not, traders? Then after that, let's see how much it moves against me. Then it never really went anywhere further down. So the maximum it went further down was to the low of this green bar, which was also an outsider bar. That's how much it went against me before moving upwards. In this example here, so let's see now if I can show you this one here. In this example here, then after that you get the idea. Then I'll show you the stats. Yeah. So then you see over here, the point of entry was on this red bar, on the confirmation bar close. Yeah. So now you can see, traders, that the next bar, how much does it go against me? Yeah, it went against me. Let's see how much then it goes before it goes all the way to the bottom. How much it goes above the blue line. Let's see. Let's keep going. Right. So now you can see point of entry, maximum point. How much did it go against the blue line? Was this high of this bar? Was it not, traders? So I moved that there. And that was the maximum it went against me. Okay. Remember, this is all collecting stats from historical movements, but using it for projection for the future. And then you'll see how powerful it is. Right. So now that is the second stats over here. So we can find that out very pretty simply. And this second stats is what we call maximum adverse excursion. Maximum adverse excursion. Okay. Right. Now, this is basically against your point of entry. How much does it move against you? And also, it can also be used for profit taking purposes in terms of trailing stop loss, in terms of your interruptions too as well. Now, let me show you. We have programmed all of this as well. So if I were to go into the settings over here, I change OE, right? Um, just a quick note, the open equity, you can also do it in ATR as well and in a percentage basis as well. So now let me go on to MAE. Now MAE, I just got to use less than or equal to sign over here. Once I've got less than or equal to sign, then I will bring this up over here. And this one, I will just come out of this replay mode. Let me just, should I close this? Yeah. Okay, good. So I've come out of that. The stats over here tells me that 80% of them go against me 100 pips before racing to the top. And it's all printed here. You see, this one over here, this move over here went against me 101 pips. Okay. This move over here went against me 148. This move over here went against me 105. This move over here went against me 68. So it's collecting all of that into here. Okay. So if you want a larger percentage which doesn't hit your stop loss, we can use a 95%, which is 150 pips. So therefore, if you put your stop loss at 151, your initial stop loss, 96% of the time, it would not hit your stop loss before it gets to the maximum point, your bottom or your top. The strength of this is the amount of data that we can collect for its predictability, probability in the future. Okay, that is how the institutional quant traders use all this data. So this is your second statistics, traders. Okay, your second statistics. This will help increase trades hitting targets. So if I were to take a look at in real time here, see for example, traders. So for example, this one here, the dot came here. If you do want to take that, remember there's no such thing as you need to take all the dots, right? You formulate your own strategy rules. Doesn't mean you take all of them, but if you did, when it goes against you, you're not scared because you got your MAE numbers. You know how much you are basically going against you before we're going to the bottom or the top. Okay, that's the power of this. Okay, all the stats, and you combine it to create a robust strategy, which we spoke about in end of November on the IX Traders show as well. Okay, so that is price tip number 2, MAE, maximum adverse excursion. And the most powerful part of this can help you design initial stop losses without getting hit a large percentage probability of the time using the MAE table over here, which I just showed you. Okay, so that is the second price action tip, or the second stats that you can use. Okay, I've shown you the practical on TradingView as well. Let's go on to the interactive exercise. I will just see if there's any questions. Yes, I got something. What time frame are you applying the question to? Yeah, I've shown that you can apply to any time frame. In fact, in the FX Pro over here, I was looking at a combination. I was looking at daily, and I was looking at 1 hour as well. Okay, over here, what I will be really looking at is for an intraday basis, I look for an 80% ATR target, 0.8 times 120, that would be 96. So from the top to the bottom, I'm looking at a 96 pip profit target, which is around 12243. Let me mark that very quickly. I've talked about this in another webinar as well. This is an intraday target, so that's why I'm marking that out. So it's about here, 12243 is my 80% ATR target. So if this were to go more further south, my entry, as of now, if I didn't enter on that, on the confirmation dot, it would be over here, entry and the initial stop loss for here. Until I see another pattern, a price action pattern come up, then I will get my entry a much more closer a bit. Okay, so that's what I will be looking at over here. So we can keep an eye on that on GPUSD. Entry for here, stop loss for here, target for here, so that when the bar forms on an 80% ATR target, I'll be out because it's formed this 80% range for the day. Okay, so that's how I can be using all of this data together, but I'll use my MAE statistics as well. Okay, on this. Many ways that you can formulate strategies, but this is the second one. And another person is asking, basically running stats on volatility. Yes, but remember, none of these stats can be derived. As I mentioned before, and I'll mention it again, none of these stats can be derived if you don't have your bottom and top quantified. It's the first step that was developed back in the 1960s and 70s. Very smart indeed. Okay. Right. So now let's go for the interactive exercise 1. This will help you again to win a prize on the Money Master the Game book. So if you guys can get it right, you'll get it. So first person to get it right will win the book. And then you can email us your details of name, email address, and number. Okay. And then our team will contact you to deliver the book over to you. Right. So here are the 2 questions. First person to answer it right, you will get the prize. So tell me, what is the definition of OE, open equity? Or the second question is, how can MAE be used in a strategy? Okay, how can MAE be used in a strategy? Maximum adverse exclusion. So go for it. Whoever gets it right, then you will win the book. I'll leave you guys to type in the answers, give you all a few minutes. Right, I can see some people are already typing it in. Right, so you got to get both. And then the ones who get it right the first will win the book on Money Master the Game, where Tony Robbins went to interview all the top billionaire traders and investors around the world. It's a really, really incredible, invaluable book where he also interviews Ray Dalio, one of the biggest hedge fund managers in the world, 160 billions in asset under management. Point of entry, I would give it to Richard. Richard, congratulations for winning it. Richard, awesome. Awesome answers. Great on winning the prize. If you can just send us your name, email address, and number, and then our team will then contact you. Okay, great. Well done to Richard for winning that. Let's move on swiftly. Now, of course, as I mentioned before, the Trader Starter Pack, this explains all these concepts over here. Some of you might not know some of these terminologies as well. You can definitely watch it. It's a really well-designed 5-day free video course. So what it is that when you click, I'll put the link in. I think if Simon has got it, he can put it on there as well. Basically, it looks like this. You just put your name, email address, and number if you want to get live trading updates. And then after that, it will give you the 5 free videos. It's split into beginner material and then advanced material in the end as well. We'll talk about all these concepts of open equity and everything. Highly invaluable, highly encourage everyone to watch it, and it will help you even improve your strategy to achieve consistent performance. Okay, so let me see if I can drop it in the let me drop it into the chat box here. Let me see. Let me see if I can get this true. This is the affiliate link, and you guys can go and register for it. Okay, Trader Starter Pack link. Okay, so there you guys go. So you guys got the link, and you can just copy and paste it there. All right, let's swiftly move on to price tip number 3. Price tip number 3, traders, is about, and so far we have learned about open equity. Okay, where is it going? How much move is left? Second thing is MAE. How much does it go against you before getting to the top? The last one is, traders, is how long does it take to get there? In other words, time. Just like how we measure a runner, isn't it? The speed of a runner. Time. Time is very important. Now, the time faculty, traders, what it does is that you can take 2 types of time. Okay, you can take 2 types of time. One is you can take the time towards the top or the bottom. Okay, you can take the time taken towards the top or the bottom, or the other one towards an X target. Okay, towards an X target. So let me show you actually what it does. The main thing what this does is, traders, it will help you reduce your average loss. When we actually researched a lot of strategies, we found in the stats that when you use a time factor, it massively significantly improves your strategy performance, especially your average loss. Remember, every strategy is battling between 2 statistics. One is total gross profit, the other one is total gross loss. As long as total gross profit overrides total gross loss, you end up in a net profit strategy. So that your aim really, if you really think about it, is to really minimize your total gross loss. How do you do that? You can definitely use one of the stats called time factor. Okay, so let me show you once more on the trading view. We've also programmed this, which is really good, right? And you can see it there. Let me bring that up here. So I can change this to time. Okay, so I change this to time. Remember, there's 2 types of time. One is time taken to the top or the bottom. Okay, I can use less than or greater than or equal to, less than or equal to or greater than or equal to sign. You can play around with that. It will do different things. I will change this to 1 and 1. because it's using a daily time frame. So 1 bar is 1 day, 1 bar is 1 day, right? So that's time, right? We're looking at now. So take a look at this. So what it's saying now, for this move, it took 9 bars to get to the bottom. No, 15 bars, sorry. Read this one. Took 15 bars. This one took 9 bars to get to the top. This one took 2 bars to get to the bottom. This one took 10 bars to get to the top. Okay, and then it's collecting all of this. In other words, what it's saying is that 83% of them will take more than or equal to 1 day to get to the top or the bottom, right? Now, 50% of that will take more than 4 days. What does this all mean? That means, how do you use it in a strategy? That means after 4 days, traders, you can start to either look to exit the trade, or you can look to trail your stop loss tight as well. Okay, so this is time 2 towards the top or the bottom. You can use it in whichever way that you want. Now, the other thing which will be more useful as well is time 2. So for example, remember I wanted to look at, let's say, the 50% target point in GBP, which was 125, right? Then I then take a look at less than or equal to and find out how many of them get to 125 pips. What is the time that 80% of them take to get to 125 pips? And I can press OK. And then I can see over here, 80% of them take 5 days to get to my 125 pips. That means after 5 days, I can either exit live or trail my stop loss tight. Okay, so that my average loss gets smaller and smaller. Okay, this is what we call time or time 2. Two types of stats that you can get. Okay, right. Does everyone understand this part? Yeah. If you understand that, any questions, just type it in. Yeah, most of you are getting it. So far, what are the 3 stats that we have looked at? So one is open equity. Second is maximum adverse excursion. Last thing is time. These are the 3 stats that every trader must have, right? To trade confidently and with conviction. But remember, none of these 3 stats you can derive with validity without first quantifying your tops and bottoms. That's the first step. Without doing that, you won't be able to derive any of the stats that I've just shown you over here. None of it. You can't derive any of it over here. You can't derive any of that. And it won't have any reproducible future. Now, by looking at all of this only, traders, that we are able to actually achieve the results that we have achieved. I'll show you that in a minute. And then we'll look at some live examples that are running at the moment as well. Now, before I show you all of that, our second interactive exercise for you all to win the prize of Money Master the Game, where Tony Robbins went to interview all the billionaire, millionaire traders and investors. Really highly invaluable book. Good on Richard for winning it. And the next question is for the second winner is this. Okay, let's see who gets the answers first. Right, go for it. What are the 2 types of time stats we can use in a strategy? And then the second question is, what is the first step to deriving the 3 stats with validity? Okay, right. Go for it. Give you all a few minutes to type in your answers. Okay, I'll leave you guys to type in. Some of you are already doing it. And I will then look later at the end, and then we'll see who gets it right first. Okay, these are the 2 questions. What are the 2 types of time stats we can use in a strategy? And then finally, what is the first step to deriving the 3 steps of validity. Okay. All right. So I'll leave you guys to type in all the answers. We'll swiftly move on now, and let's take a look at the live trade examples and our account statements as well. Okay, on how this 3 stats is proving to be really strong in real time and with its predictability feature. Okay, so here's a few ones I will show you in real time as well. This euro-dollar chart was taken back in 7th of November, 220 pounds from point of entry, exit here on 80% OE exit over here is what we are looking at. Then the next one over here is you can see over here, you can see all diagrammatically here. The silver chart, we took it on a 60 point here. Look, entry on the dot, and then of course, then we are looking at exit based on 50% open equity distance over here on the cash in 4.0 strategy. Again, this is another 50% open equity strategy. This actually lost 61 pips. Okay, it hit our initial stop loss from our MAE numbers. So that one lost a little bit of cash on that. This one here did win a big one. Over here, Euro Yen chart was a 301 pip move over here that it did. 3,010 pounds, 10 pounds a pip over here, based on a 50% open equity distance too. And over here, on the euro dollar, this lost 830 pounds over here because it hit our initial stop loss over there based on MAE numbers, maximum adverse excursion numbers. And then finally, what we got trade number 6, 5,230 on Brent oil that we did, 523 points. You see this immediate reversal didn't really hit our stop loss because of our MAE numbers that gave us the confidence. Okay. Now let me also show you in our trade journals as well over here, which we got in 2022. Really great year what we got. 3 strategies that we ran. Overall, we ended up with 73.34% up. Really strong win. 80% open equity strategy was the 1-day exit that we got over here. Over here, you can see that this one won 21.86%. This is just not numbers pressed onto a Excel spreadsheet. You can see every day we are logging it in last year and taking the trades in real time with all entry, stop loss, and target. Every single trade, win, loss, everything is all logged in all over here, traders. Yeah, every single thing. Okay, on each tab which belongs to each strategy. Most of these strategies, I think the questions are, what time frame are we doing it? We usually do it on daily time frame because most of our traders have got full-time jobs, so they do end of day, they place the trade, they forget about it, and come the next day and manage it. Okay, entry, stop loss, exit, all managed. So this each tab for each strategy, you can see every single thing all logged in with transparency so far. And this year, what we have is, if you look at 2023, this is our 80% OE str exit strategy on 4th of Jan. Started with Brent oil. Brent oil, I think we already took a small loss the first trade. After that, we recouped it back with dollar yen. This one was quite a bit of a loss on silver. After that, we have gathered it up again with the string of winners on the 80% open equity probability strategy. So far, on 80% open equity, we've taken 16 trades so far, dollar yen being the last one on the 23rd of Jan. So you can see over here what I'm saying and everything. So let me just bring up the dollar yen trade over here. And you can see what I'm actually talking about. This was the most recent trade call that we gave for all our trade members. You can see the trade call, the confirmation bar here. And then we just take it for a very short target based on the 80% open equity probability, which I just showed and shared with you. And then based on that is what we are developing here. This was the last one, 23rd Jan. We came out within 1 day, it hit the target 0.50% profit. Okay. So that's how we are using all of these stats to achieve our results. And also you can see this is a small client account that I can share with you as well. In real time, you can see over here, when I show you here as well, we can show you all the um, trades that they are taking based on the open equity principle. So far, all the wins, all the losses since August last year. I showed this in IX Trader Show as well. It's just building up these accounts, and you can see that they're really quite rigid with their risk management as well. You can see that they're up 282 pounds so far Last trade being taken on 11th of January. Dow Jones on a 50% open equity strategy, and so on and so forth. So they're doing two types of strategy here, 80% open equity and the 50% open equity to get a smoother drawdown. So overall, how much are they up so far? Not even a year yet, but 282. Let's just say, okay, if you want to be exact, divide by 1,500 initial account balance. That was 18%, right? 18% up within just a little less than 6 months. Okay, pretty decent. And of course, if you do that on a 10,000, 100,000 pound account, that's a decent amount of money. That's 18,880 pounds. So you can see right from the theory to the practicals, and in real time, the whole methodology is working. You guys should really see it in real time because it's really powerful and logical and methodological as well. You see the whole three stats. Okay, open equity, MAE, and time taken. Right. I guess that's pretty much that what I wanted to show. This was the Trader Starter Pack link that you guys can look at your own free time. Okay, so I've put that back on the link. Thanks again, Simon, for putting that through together. The last thing that I do want to mention is, I think I did show this in Trader Show, is this collaborative effort. You see, when you guys actually learn from us and go through our material and all of that, and then you wish to learn more further with us via educational programs and all that, it's all towards a collaborative effort, working together to spread the truth. It's not just about you spending money with us and we taking your money and we running off. No. So this is how the money actually works together, works harder. MTM clients comes in, buys our services. If it chooses to improve their performance, it's used in research and development, which is then used to create robust trading systems and provide you a quality trading education so as to then improve your cash flow, improve our company cash flow so that we all can then break the time and money link much more further and stronger. This is the whole collaborative effort that I do want to get you all to understand. Okay. All right. So far, what have we looked at? We looked at the 3 price tips for consistent performance. So far, you should have learned the 3 price actions tips, which are, what are they? So type into the chat box if you remember, what are the 3 stats or 3 price action tips that you've learned so far today? I want you to type that into the chat box. The last thing is how to apply them in real market conditions. I've shown you that as well, how we do that, how we look at that in the TradingView platform, and I also shown you live trade examples and account statements as well on how we are achieving those results. Okay, traders, right? Right. And the last thing is that for those of you who want to ask any further questions on this, you can always ask us. You can book a one-to-one session with our trader coaches, and they will help you answer that question. For those of you who book in today on my calendar, then you can get a session with me as well. Okay, so let me just put this into the chat box here. So that's our coaching link over there. If you want to ask any further questions on the indicator, on any of the stuff that we covered so far. Okay, in terms of, I'll just put up this chart over here at the moment for us to take a look at different traits. And I guess if there are any questions, you can just type it in and I'll take on any questions at the moment. I think the usual question that is coming is, what's your preferred time frame for this strategy? Which time frame? It's not about which time frame gets the best results. So it is about how you construct your strategy. It's called strategy construction. So far, the examples that we are doing here at Master the Markets is all on daily time frame combined with weekly and monthly. Okay, all based on this concept of open equity. How much move is left? We also have design strategies on intraday time frames, which is based on daily, 4 hour, and 1 hour. The right question to ask is not that which time frame gives the best results, is which combination of strategies gives you the lowest peak to valley drawdown. As professional traders, we are always thinking of reducing your drawdown number. Okay, That's what we're looking at. Then once it's been well thought of, the upside will look after itself. Remember, strategy construction is a different art and science together after you've looked at the three stats, which I shared with you all today. The three stats will help you design a strategy which is sustainable, scalable, and reproducible. Okay. And if you do it over different instruments, that will also reduce your drawdown as well. And when you did ask something about do you use it mainly on forex? No, we do it on indexes. You can see over here. This is the Dow Jones. I can apply this. I can apply this over different time frames as well. So I can do this over 4 hours. So you can use this across. It's very fluid, you see. It's very flexible. You can use this over any of your strategies that you are doing at the moment as well, right? 80% of the time, you see, whenever I get a dot on the Dow Jones on the 1 hour, 4 hour time frame, it will move 50 points immediately within few seconds. I know, right? So I can do this across any instrument. I can do this over Apple as well. This is a daily time frame here. I can put this on 1 hour too. I can do this across any time frame immediately. You see, it tells me 25 cents. It gets to 83% of the time after I get a dot. Does that make sense for anyone? Everyone? Yeah. So I can do this across any time frame. I'm not limited. I can even do this over a 15-minute time frame as well. But you know, the you can really fully maximize the potential once you really understand the concept of open equity. Really, when you really understand open equity, you can actually combine time frames together, right? You'll enter earlier on a 15-minute to ride the wave on a 1 hour, 4 hour, and finally on a daily. That's the power of open equity. Yeah. The thing that most traders are very impressed about here is that we are we are the only ones actually. Even when I showed this to my mentor, he said, "You're the only guy who has programmed this entire thing now." And the good thing is, nowhere online or any book that you see, you can ever have any stats which is valid based on point of entry, which gives you a probability of how much move is left. And you'd be so surprised when you trade it in real time, it will get to its numbers because of the large data range and the validity and the strength of the concept. Okay, right? So a quick thing I'll do for you guys now is if there are any other questions, I know I only got 5 minutes. Quick thing what I will do is I'll tell you guys what is a high probability of trade setting up for today on dollar yen. There isn't on a daily time frame. GBP USD, you can take a look today. If this um, confirms today, right? If an arrow pops up through our indicator, and if it does confirm today, then we can take an 80% probability trade. And if it then aligns with a few more factors, we can take it to the 50% open equity distance. Okay, so that's the GBP USD. Aussie dollar, probably not. Euro yen. Euro yen. This one I would like to share with you. We did take a trade on this on a reversal. It did clip us in today, but hit our stop loss. So we had a small loss. Usually outside the bars happen only 10% of the time. So that was a bit of a loss for us, but doesn't matter. But we take it consistently and wait for the big runs because of the conviction that we have in the stats. Euro dollar, uh, probably not. We got dollar Swiss, Dow Jones, silver, Brent oil. Brent oil could confirm as well. So we could look at that today for the 80% open equity strategy too. I've got a request here to look at GBP Aussie. Kid, let me see. Let me take a look. Let me get GP Aussie here. Let me show the. Actually, it's more easy if I do it on Trading View, isn't it? Let me take a look at Trading View. Let me do GP Aussie, isn't it? GP Aussie. GP Aussie. I think I'm running a little bit of time. GP Aussie. There we go. Right, so at the moment, we just had the confirmation 2 days ago. Let me take a look at the 4 hour and daily time frame. Yeah, that's fine. So let me just put quickly the stats, and then we can wrap up after this. We can look at O.E. We can look at 25. 25. Let's see what the 80% this one is over here. And I can get all my MAE stats here as well. Yeah, most of the time it runs 50 pips. So really good. It's a good runner here. That's really good open equity on a daily time frame. And if I were to do 4 hour, let's take a look at 4 hour. So when you correlate them, that's where the real power is. So this one here, yeah, 25 pips it travels on a 4 hour as well every time I get a dot. So you can see, traders. So if I did take this dot over here and I held on to it, it did go 25 pips. That's the power of the bottom and top quantification done by the institutional quant traders back from the 1960s and 70s. Okay, so that's things that you can look at. All right. Do we have a Telegram channel? No, but you know what? We have a WhatsApp thing. So you know this one that I showed you over here, Tina, that once you put your number here, then our staff at the end, backend, will then add you onto our WhatsApp group. They will contact you to add you onto the WhatsApp group. Then you can get our live trading updates as they work in real time as well. And you can learn a lot from them. We produce a lot of good quality information out there. I guess
Fantastic.
that's pretty much that. Simon, I think we're out of time, isn't it?
You certainly do, and thank you, Thiru. Yeah, we're right up at the hour, which is great. We've got Alpesh waiting to get started after you. So, but thank you so much for that presentation. Lots of great
Pleasure.
interaction, lots of great questions. Make sure that Richard, if you can email me your details, and I'll pass it on to Thiru for you to get your prize. Of course. So thanks very much again. Remember, folks, here's a replay once we finish and move into another session. So if you want to come back, you can watch the replay on this same link. Thank you, Thiru. I'll take it back now from you, and thanks for joining.
Thanks, everyone. Thank you.
Okay, great. Now, so we're just about up at 1 o'clock. Alpesh is in the I think it's Alpesh in the room. He texted me to say I'm logged in, where it's far too early for Alpesh being in 2 or 3 minutes early. I just think I'm getting spammed or hacked or something. I'm going to take us into the next session, and we'll bring Alpesh in for great stocks of 2023.